Hi all, welcome to Static GK channel. Today we'll be talking about the monetary policies, right? Monetary policy part 1 video. It's a revision series for your examination. So the topics we'll be covering here is what is a monetary policy, or what is RBI governance, functions of RBI, the monetary policy tools which are there. So these are the topics that we'll be covering throughout here. So first getting into the topic, what is monetary policy? See, actually, this is done by the central bank, which is the RBI in case of India. So what it does, it takes care of the interest rate, money supply, which is there in the economy. And thereby, what is the motto of it? It is to control the inflation, to have a growth, to maintain stability, to increase the employment. These are the basic needs of monetary policy, which RBI does. Further going on, how does RBI came into being? It came into being through RBI Act of 1934. So how did RBI Act of 1934 came? It came through recommendation of a Hilton Young Commission. Therefore, after RBI Act 1934 came in, 1st of April 1935 RBI was established. From 1st of April 1935 to 1949, if we see, RBI was privately owned. After 1949 only, RBI was nationalized. So nationalization of RBI takes place in 1949, important fact. Then initially the headquarters of RBI was in Kolkata, present day Calcutta. But in 1937, its headquarters moved to Mumbai. Important fact. Now coming to RBI governors. First RBI governor is Osborne Smith. Indian governor, first Indian governor and third governor of RBI is C.D. Deshmukh. And another general fact, we have one governor and 4 deputy governors in the RBI for information. Now coming to the functions of RBI. What are the functions this RBI does? It is issuer of the banknotes. Who issues banknotes in India? It is RBI. But there is a condition here, except 1 rupee note. 1 rupee note alone is printed by the finance ministry. Okay, actually the finance secretary is the one who signs the 1 rupee note. Except 1 rupee note, all other notes in India are made by the RBI. Next, coming to banker to government. RBI acts as a banker to government. It acts as a banker to the central government, state government, and all. Right. Then it represents India in the world forums like World Bank, IMF, and it is also a lender of last resort during financial difficulties. As for example, if there is an XYZ bank and it is facing difficulties, no other bank will come to save it. At financial distress and difficulties, the final last resort, RBI will come in to save that particular XYZ bank. Therefore, it is called as the lender of last resort. Next, coming to bank. Next, coming to bank NBFC. Bank, we have an entity like banks, NBFC, and all. And the regulator of this is RBI. RBI acts as the regulators of the banks and the NBFCs. Next, coming to the foreign currency reserves, it is a custodian. Forex, we generally used to call it as Forex. So actually, RBI is the custodian of this Forex. And cash reserves of the bank, CRR. Another term that we have to know here is CRR. The CRR that the bank has to deposit with the RBI. So who is the custodian of it? Actually, RBI acts as the custodian of the cash reserves of the bank that is kept with RBI. Then if we talk about governors and 4 deputy governors, how they are appointed. See, actually they are appointed by the central government, and RBI is actually the independent apex monetary authority in the country. Now coming to the final topic, monetary policy tools. What are the monetary policy tools that we have? We have quantitative tools, we have qualitative tools. So what is the motto of the quantitative tools? Actually, quantitative tools talks about total volume of credit. How to increase the total volume of credit, decrease the total volume of credit. For that, what are the quantitative tools that RBI uses? That is the monetary policy tool relating to quantitative tools. Qualitative tools like giving guidelines, moral persuasion, moral suasion, direct action. So these kind of directly using some guidelines or taking action. It tries to control the availability of the credit with various borrowers, and for that, the monetary policy qualitative tools we use. See, both rules are efficient in performing the monetary policy goals. Thank you. In part two, further we'll talk about the quantitative and the qualitative separately, and you'll have a further good understanding of it. If you like this video, please like, share, and subscribe. Thank you. We'll see you in the next video. Bye.